Welcome to Zetwerk Dialogues. I know COVID seems to have overtaken our lives, all our discourse, but through Zetwerk Dialogues, we at Zetwerk are trying to keep the conversation alive around important issues to do with the economy, to do with manufacturing, and to do with startups. And today, our special guest is Mr. Rajesh Bansal, who is the CEO of RBI Innovation Hub, which is a relatively new arm of the RBI, a relatively new thing the RBI started. Now, more about this later from Mr. Bansal himself. But let me tell you something about Mr. Bansal. He was in the founding team of Aadhaar. He's been instrumental in constructing and building Aadhaar the way as we see today. He was also instrumental in the rollout of the direct benefits transfer program of the government of India. And he's been a veteran central banker. So he's a man of many talents. As a former journalist, I have known Mr. Bansal for many years. So, Mr. Bansal, it's my privilege to have you at Zetwerk Dialogues today.
Thank you so much, Rohi, and thanks Zetwerk's team for inviting me.
Now, we also have on our panel the team Zetwerk. We have Mr. Amrit Acharya, who is the CEO and co-founder of Zetwerk Manufacturing, and Srinath Ramakrishnan, who is the COO and co-founder of Zetwerk Manufacturing. Mr. Bansal, we know today the conversation is going to be around the interplay of supply chain and financing in manufacturing. But to ask you, we were just talking about how Zetwerk believes in innovation, and you are heading what is known as the RBI Innovation Hub. So what is this RBI Innovation Hub? What role does it play? And what was the objective behind its conception?
So, Rohi, to talk about the newest baby of the Reserve Bank of India, the Reserve Bank Innovation Hub was set up last year with the objective of fostering and evangelizing innovation in the financial sector as an enabler for every sector, whether it's manufacturing, services, retail, every consumer. Because what has happened in India is we see a lot of fintech innovation. You read about one more unicorn in fintech. But the concern has been that are they really impacting the lives of the next 500 million? So that is the sole objective with which RBI set up a not-for-profit company, Reserve Bank Innovation Hub. I joined as a founding CEO in May last year in headquarters of Bangalore. And I get asked this question that, okay, what is your role? So as I said, foster, catalyze innovation, and I'll give some more examples so that the audience has a better understanding. So my motto, or my first talk about the mission. My mission is, how do we ensure suitable, sustainable financial products available to 1 billion people and enterprises, if I'll add in this context, in a secure, frictionless manner. So secure, frictionless, suitable, sustainable products. And for this mission in mind, we are looking at 3 key pillars of innovation. One is the process innovation. Because if we look at any sector, whether it's a micro enterprise, a manufacturing sector enterprise, or you and me, there is so much friction in first onboarding a customer onto a financial institution. Thereafter, the customer goes through a lot of friction in accessing a financial service, whether it's savings, payments, credit, or whatever else. So that is the key process innovation we are looking at. And our aim is that it should be digital and single click, which is not the case. And to that end, we are doing a lot of projects. The second one is product innovation. The financial sector has followed a cookie cutter approach to, and more a supply side approach to credit products. So their take is, take it or leave it, this is a product I have. But we are moving beyond that. So looking at how do we innovate financial product based on data points for me separately, for you separately, and for Amrit separately, and for MSME in Gurgaon separately. So that's the kind of product innovation. And lastly is, how do we look at policy innovation? So work with regulators, including RBI, other regulators, and the government of India to enable innovation to the next level.
But it is an interesting topic you mentioned, sir, in terms of the products that are available. And specifically with MSMEs, we see that supply chain financing is a big necessity for them. And some of the products we see in the market are fairly limiting in nature in terms of their scope. And often don't serve the exact need. Maybe some context here would be helpful. Like why do financial institutions behave this way? Like, what is it that they look at in terms of risk? And then hence, how can we provide additional data points to mitigate that risk as an ecosystem necessarily?
So thanks for asking that question. And that's so interestingly, I worked in about 15 countries. India is the only country which has a mandated lending called priority sector lending. So for decades now, every bank has to lend 7.5% of its adjusted net bank credit, which is basically simply defined that total out of 100 rupees, 7.5 rupees should go to the MSME sector. So that's a unique thing. But however, as you said, we haven't seen the desired impact, although there have been a lot of committees set up by the Prime Minister. I worked on a committee which was set up in about a decade back. And the Principal Secretary to PM was, so government has been working on it. But the key points are 3 or 4. One is, yes, there is a mandate. Do the banks fulfill it? Yes. Because most of them still see it as an obligation than an opportunity. So they say, if there is a mandate, I have to do it. And they figure out a way to do. And again, as I started with, that the larger corporates are what every bank wants to lend to. Reason is simple. I have better visibility, right? I have better visibility on their operations, on their financials and everything. So that's one important element because of which MSMEs don't get the right this thing. And in manufacturing, I feel, which is, the focus area was Zetwerk, I see that it is compounded a bit more because a large, requirement of manufacturing companies is to do with working capital.
Sir, my question is on what do you think is the role of these new age fintechs in plugging the supply chain financing gap? Is there a real opportunity for India? And what do you think is going right with the fintechs, and where are the opportunities that from your vantage point that you see are further available?
So that's honestly, my simple answer is this is phenomenal opportunity in terms of retail payments and credit. Yes, there is an opportunity, but supply chain financing, because, I think the latest data I know, only 8% of MSMEs have access to formal credit. And there are 6 crore MSME. So with the kind of interplay that companies like yours bring in, if finance and fintechs have a huge opportunities, and this decade, I feel not just more and more unicorns, but more and more impact on this sector coming up. Having said that, some of the recent developments which are aiding fintechs and how they can utilize the opportunity. First and foremost, you've seen that in this decade, there have been increased digitization of the economy itself. And especially in the COVID times, all of us know that digitization is the key. Then there is increased digitization in the MSME sector. So I've been in charge of MSME policy a decade back at RBI. And I know that, when you attend meetings with the MSME industry bodies, they were always, I would say, not very forthcoming to invest in digitization for the ROI reasons, right? But thanks to COVID in some ways, the positive impact is that they had no option. And now they're realizing the true benefits of MSMEs. Then the fintechs have another advantage, that new modern tools like SaaS softwares, which makes their life easier. Because if I was an MSME, I would have to set up a server, I would have to set up tax software, invoicing software. All of that is not required. I'm forgetting the name of the company, which just 2 days back was another new SaaS, which is working with MSMEs, which is again, has a $1 billion valuation. So then that coupled with new B2B e-commerce companies, whether it's Udan or so many other companies, which provide so much visibility. So they can tie up with fintechs to actually provide credit to a number of companies.
What are some of the challenges that companies even like, let's say, fintech companies or early stage companies can face today, because things are still not as seamless as they should be, or they can be over a period of time.
Yeah.
If you, again, from your vantage point, what are things that still are not working as well as they can?
Sure. So one is, I talk to a lot of fintechs, and then somehow there is some lack of standardization in various processes. GST is one big advantage, but, and I mean, to be fair to fintechs, and I'm being, some of them become too tech focused rather than looking at their customer. So I keep on asking them, yes, you have a great solution. Have you discussed with the MSMEs? And a number of them are like, no, sir, it's a great idea. I said, fine, but that idea has to work for your constituent. So it needs more and more fintechs to start understanding the needs of, because needs of a retail consumer is very different from an MSME sector. So it's a little more complex. That's a challenge. But again, they have a lot of advantages, I'll be honest, because they are agile. They can do a lot of degree of customization, which is not easy for a bank. So an MSME, as I was saying in Tirupur, on apparel, they could be neighbors, but looking at their profiles and their data, the kind of loan product that can be offered can vary.
Sir, you talked about digitization before, and the accelerated digitization that is happening in the post-COVID world today. Can you give us some insights on what's the current status of digitization in MSMEs? And also, one other topic associated with this is, how does digitization affect the ability to access credit, and also the ability of the lenders to do better underwriting?
I would put a number of, so if our ambition is to get to 100 in terms of digitization, I would say it not be more than 10 to 15 in terms of processes, industries, sectors, all of that. So a long way to go. And that actually is one of the key reasons. And as I mentioned earlier, if you don't digitize your data, your books, your stock, nothing is transparent. And if that is not transparent, then the lender is obviously not very keen to lend. And so coming back to the previous question is Amrit asked on opportunities in some ways. The fintechs have to not only understand the needs of the consumer, they also have to understand the needs of language and financial literacy. So MSME need to really work on, not necessarily offering multiple languages for digitization softwares that they are looking at, but also, work on, I would say, the right UI, UX, or a great customer experience, as I said in my mission statement. So I would like to make that happen, to see how anybody in rural Uttarakhand, Kashmir, to Trivandrum, to Coimbatore can actually digitize and then give transparency, which makes credit flow easier. I hope I've answered your question, Srinath.
Absolutely, sir. Yes, thank you.
Great. So this is like a lot of insights from your vantage point. And I know RBI and various policy bodies have also done various new initiatives. Things like account aggregator, for example, comes to mind as a new initiative, which again promises to unlock a similar kind of opportunity ahead. Can you maybe share some thoughts on how this came up, and what is the thought process behind policies like account aggregator, and how can they really help MSMEs or other participants in the ecosystem take the leap ahead?
Sure. So basically what was happening is that your typical MSME might have an account with a bank, let's say a Canara Bank, for last 10 years. And there is a new age fintech which wants to offer a loan to them. What would they do? They would take a printout of the statements, get them certified by the bank manager. They would print out their income tax statements, and other financial statements, and say I also have, let's say this insurance policy or whatever, largely proprietors, and then take it to a fintech. Actually, a fintech is not okay with the physical world. So there is the issue of how do you ensure seamless flow of data between where it is sitting in a box in perhaps a bank or an insurance company and the new age lenders who want that data in a machine readable format, what are called as financial information users, and the banks are largely the financial information providers. They can also be FIBs, right? So that is the ethos behind which RBI came up with a new category of NBFCs called account aggregators. And if you ask me, that is a very great initiative by the RBI, and account aggregator has the potential to ensure that every bank, every lending institution can take credit decision faster, because they will get data in a machine readable format. They can use AI, ML, their own credit engines to arrive at a 2-minute, or a 5-minute credit. Again, example being Tirupur, somebody in Tirupur, because that person in Tirupur can share data of 3 bank accounts that they deal with. And that is serious visibility. So setting up a standard, secure, digitally signed, data exchange framework is what account aggregator does. And will also enable that it is more information based, information collateral based credit underwriting, rather than necessarily physical, land or any other assets and machinery.
Great, sir. Sir, we often read about blockchain and the enormous potential of blockchain in delivering seamlessness in supply chain use cases. The question is, what do you think is the scope of blockchain in supply chain financing, particularly in a manufacturing sector where there are MSMEs in the middle, and then there are raw material mills which are supplying, and the other end of the spectrum there are customers, and then there is finally going to retail. So what's the scope of blockchain in supply chain financing for the manufacturing value chain?
Yeah, Srinath, that's a good question. So as at the beginning of this conversation, I mentioned one of the key issues is low visibility on the operations of MSMEs, especially in manufacturing. It leads to low trust. And as we all understand, blockchain works best. So again, just on the sideline, people talk about blockchain in everything, but I am working on which are the low trust environments. That is where you see the real utility of blockchain. So the primary areas of pain which we see are visibility, process optimization, and demand management. The blockchain system, ecosystem, will provide trusted records that will address these concerns. As you said, right from manufacturer to dealer to raw material supplier to the customer, and the blockchain smart contract feature, where all parties in a supply chain finance can be brought on a single shared ledger, can actually solve. So this, with the account aggregator framework, are great tools. And let's say the supplier and the manufacturer transact on a blockchain-based platform, will bring efficiency, trust, and transparency on a ledger record that is immutable. And some of the banks have already, I don't want to name, but it's encouraging that they have started end-to-end, where their supplier and their customer at the other end, they have started using blockchain technologies to bring efficiency in supply chain financing. However, a lot needs to be done now at an ecosystem level.
Very interesting to hear you talk about a lot of technology-driven use cases. Sir, you've worked extensively in the area of technology and digital, specifically for the manufacturing sector. What do you see as the role of technology to revolutionize a very traditional supply chain like manufacturing?
So, as we discussed briefly earlier, Technology is no more do we need it? It's a given that we need it. How do we go about it? How do we ensure that the MSMEs see returns on it? Is what is the challenge that we have to address. So let's say, one of the things which hasn't worked as well is government RBI set up what we call as a trade framework, trade receivable and discounting system. But it hasn't gone to the scale that we had imagined it was. I was part of that committee that recommended. So that is something which we need all stakeholders to come together to see what do we do to resolve trades. But beyond that, looking at just digitization of their operations of MSME, I would say that we need to set up more and more R&D initiatives, which are more sector specific. And the best way is not an individual company investing in it, but more PPP initiatives.
But thanks a lot, sir, for taking out the time. Certainly, as entrepreneurs, sometimes we feel we also live in a bubble, where we are just looking at technology as a standalone tool, and sometimes it's important to get various stakeholders and participants in the ecosystem to further the common mission, because at the end of the day we're trying to solve the same problem.
Yeah.
And we're approaching it from different issues. So it's really appreciated you taking out the time and sharing your thoughts, and love to kind of further this dialogue over a period of time and see how we can work together and solve some of the common problems that India faces. But really appreciate your insights a lot.
Thanks for having me over. Thanks, Amrit, Srinath, and Ravi. And
Thank you,
look
everybody.
forward to
Thank you.
working together. Yeah.